Welcome to the weekly trading signals. I'd like to start the session by giving you some information about me. My name is Ihab Jubil. I was born and raised in Egypt. I have been trading for a number of years, mainly on Forex and commodities, and in recent years, I have also set up my own trading robots, signals, and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. There will be a number of tradable economic news that we will be looking at this week. With the first event, Australian CPI quarter release that will be released on July 27 at 1:30 a.m. GMT time. The Australian dollar CPI number is quarterly release, and any surprises should drive the short-term trend of Australian dollar in the direction of the surprise. It's forecasted at 0.4%. Previous release was at minus 0.2%. How to trade this release? Our plan is, if we get a better than expected CPI data, we should see strong upward move at the Australian dollar by at least 40 pips within first 15 minutes after the news release. But if we get a worse than expected number, Australian dollar should drop and we should expect the market to consolidate. Drop, then consolidate if we get 0.1% or worse. So on a minimum deviation or a minimum release of 0.7%, I would recommend to make rise option on the Australian dollar after a decent retracement. And if we get 0.1% or worse release, I would recommend to make full option on the Australian dollar immediately. So we have here the chart of Australian dollar daily chart. If we get 0.7%, I expect the Australian dollar to get strong. So we should wait to see 40 pips of market movements within first 15 minutes. Then we should consider making rise option. So 0.7% or higher, 40 pips, rise option after decent retracement. If we get 0.1% or less, we should also wait to see 40 pips of movements of the market downwards. Then after decent retracement, we should consider making full option on the Australian dollar. If we get in between release, if we get between 0.1% and 0.7%, I expect the market to keep moving in the same trend. And in this example, I expect the market to keep going downwards. Keep going downwards to the level of 0.7425. As always, I recommend to draw support and resistance levels before the market release. Because if the market breaks through these levels, it means you have better opportunity at winning the trade. About the duration of our trade or option is 4 trading days. 4 trading days, I usually make it as duration of the options I buy. Second news with us for this week is UK prelim GDP quarter release that will be released on July 27 at 8:30 a.m. GMT time. UK prelim GDP is the most important of three GDP releases since it is most likely to surprise. With market already bracing for the impact from the Brexit, this release may provide a false reading as the real impact will probably come in October. However, I'd still be looking to trade this news, but more towards down direction for the pound. It's forecasted at 0.5%, previous release 0.4%. How to trade this news since this is the first release of the second quarter GDP for 2016 for this year. We are likely to get a huge reaction if we get a surprise. If we get surprise release, I expect huge reaction and high volatility because most first releases are what the market looks to. And considering the recent positive trend in the economic data, we may get a strong surprise at this release. However, we will still be looking to trade the release using our after news retracement method. Our surprise factor is around 0.3. So we will look to possibly make full option on the pound if we get 0.2% or worse, and price option on the pound if we get 0.8% or better. The recommended currency pair is pound New Zealand. The chart we have high draw resistance and support level. If we get 0.8% or higher and the market moves at least 40 pips within first 15 minutes, expect the market to move upwards after recent retracement as we usually do. If we get 0.2% or less, wait for 30 pips of movement downwards and place your order. If we get in between releases, the market should keep going in the same trend, and the market also, I expect to respect the resistance and support level. So if it breaks the resistance or support level, I expect the market to keep going in the same direction. US FOMC interest rate will be released on July 27 at 6 p.m. GMT time. US FOMC interest rate decision is the main focus of the week, but with most federal officials and the market in general are expecting the federal to hold the current policy, however, keeping rate hikes on the table for future meetings. Obviously, with recent non-farm payroll mess, there is no reason for rate hike. So if Federal were to hike in this week release, we should see plenty of strong market reaction. It's forecasted at 0.5% as previous release. How to trade this news? There are three potential scenarios. First, if Federals talk about easing or explores the option of negative interest rates, I would be going long. I will consider making rise option on the euro dollar and full option on the dollar yen immediately. So I will expect the dollar to get weak if Federals talk about easing or explore the option of negative interest rates. Second scenario is if Federals maintain the current policy, no change in the currency policy, we will probably see very little response as this is the current expectation. Third scenario, if Federals talk about hiking rates further soon, we should see some strength in the dollar. I would probably make rise option on the dollar against pound and euro as both currencies are set to decline the most. In this chart of dollar Japanese yen daily chart, the market moves in channels. If the market breaks the resistance level after the news release, I expect the market to keep going upwards. If it doesn't, so I expect the market to keep going downwards. And in this case, we should consider making full option on the dollar yen. So the three scenarios again is if federals talk about easing or talk about option to negative interest rate, consider making a rise option in the euro dollar and full option on the dollar yen immediately. If federals maintain the current policy, no change, watch the market and see if it breaks resistance levels to make rise option. If not, make full option. Third scenario, if federals talk about hiking rates further soon, consider making a rise option on the dollar against pound and euro. Canadian GDP will be released on July 29 at 12:30 p.m. GMT time. Canadian GDP is expected to come in at a low reading of minus 0.5%, and we will be looking for a minimum deviation of 0.3% to trade this release. Considering the drop in crude prices and the correlation with a strong dollar, I would not expect to see strong surprise in this release. But if we do see this surprise, it would be rather positive for the Canadian dollar. How to trade this news? Let's look to make full option on the Canadian dollar if we get a minus 0.8% or worse release, or we should consider making rise option if we get 0% or better release. With recent weakness seen in the Canadian dollar, a strong fundamental such as this release, Canadian GDP figure, may be the catalyst we need to see more volatility in the Canadian dollar. Don't forget to draw support and resistance levels before the news release. And in case we get 0%, consider making rise option on the Canadian dollar. Here in the chart, pound Canadian dollar 4-hour chart or 40 pips before entering the market with first decent retracement upwards. If we get minus 0.8% of release or less, consider making full option. If we get in between release, see if it breaks resistance or support level, and consider entering the market in the same direction. And the pound Canadian dollar, if we get in between release, I expect the market to keep moving upwards to this level 1.743. You can visit my website for more information as well as the free trading signals. We have now come to the end of the session. I hope you found it useful. Goodbye and see you next time.